Welcome to Pressure Points. Our topic is Apple earnings. And as of this recording, which is about a half hour after the earnings call ended, shares are up 3% in after hours. They had peaked at 4% and were down as much as 1 or 2% before the earnings call. And so I'll jump right into the pressure point, which is how is the iPhone doing? And the bottom line is that it's not doing as well as we had hoped. But the miss wasn't as big as it looked at first take. And I'll dig into the numbers. So let's rewind 3 months ago. After a lot of the excitement in September around Apple Intelligence, the street was looking for 6% annual iPhone growth in the December quarter. And then as the rollout became a little bit slower, as there was talk about China weakness, those numbers drifted lower. And just before they printed, the street was looking for 1.5% growth. They reported iPhone down 1%. And so kind of they missed the miss in some ways, came down and then they missed that. On the earnings call, Cook talked about that half of the weakness in China. So China was down 11%. I suspect that the iPhone was probably down 12 or 13%. Half of that was related to them bringing down channel inventory. Essentially, they thought China was going to be a little bit softer than they expected. And so they didn't refill that channel inventory and it started to come down. That meant that revenue growth was 6% worse. So if you adjust for that, the iPhone would have basically been flat for the quarter. And so it still would have been a miss, but it would not have been as much of a miss. It would have been flat versus the expectations of 1.5 was not the down one that they reported. So that channel inventory dynamic, they said that they're going to correct it in the March quarter, had a positive impact, which we'll get to in a second in terms of the guidance. But I want to focus just in terms of what's going on with the iPhone as the pressure point. So more broadly, the iPhone just isn't having the kind of adoption that I was expecting at this point. I believed going into this that the 3 years ago, that huge year, fiscal 21, iPhone up 35%, we'd start to see a positive impact on the iPhone numbers, and that it was kind of a layup for them to hit that 1.5% number for the quarter. And as we play it forward, the numbers were softer. But then there was this language on the call that Cook said that this is their best upgrade quarter ever. He said that iPhone 16 is doing better than iPhone 15 in terms of upgrades. He attributed that to Apple Intelligence and the regions that it's available. But I think just even more broadly, taking a step back, is that still would like to have seen more from the iPhone. And he did make a comment. The last question on the call was related to what happened a few years ago and how to think about that upgrade pool. And Cook's comment was that they sold a lot of devices during COVID, and that is an opportunity for upgrades going forward. And so I think that it's hard to determine exactly which quarter these upgrades fall into, and whether it comes in this December quarter or in the June quarter. I think effectively they are coming. And the reason I think they're coming is that the flywheel, the ecosystem around the iPhone is intact. They've got a record install base. They talked about their active install base of devices was up 7% year over year, which is just impressive. 2.35 billion devices. It's hard to grow a number that big, but continuing to grow at that 7% level, 7% is impressive. And I think that it speaks to this concept that it's hard to predict the iPhone in any given quarter. But if they miss out on an upgrade in one quarter, they're probably going to pick it up in a quarter or two down the road. So overall, I continue to feel good about the iPhone. It was pretty clear that they, again, said that they're seeing good traction in regions. Mostly those are English-speaking regions where Apple Intelligence is available, better sales in those regions. And they kind of laid the groundwork that once new regions come out, that's going to start in the month of April. So they'll hit the June quarter. They should start to kind of see some improvement. So as we think about kind of the iPhone's trajectory, it probably goes from reported numbers down 1% to up 3% in the March quarter to probably up something like 4 to 5% in the June quarter. Just as kind of a rough outline of how that plays out. But overall, the iPhone franchise is intact. It's got some bumps in the road, but it is intact. Next, I want to drill down. That's a pressure point, what's going on with the iPhone. I want to go through some other topics, including China, and just specifically, even if you adjust for that inventory, it was down 6%. It was down, call it 0.5% in the September quarter. And Huawei was up 15%. This is based on third-party data. Apple and Samsung, again, based on third-party data that we saw a lot of over the past few weeks, were basically down. We don't know what the exact number, probably similar to that, down 6%. But there still seems to be this gap that is expanding. Part of it may be that Huawei has artificial intelligence with their Cecilia assistant in, which is basically a large language model, and Apple doesn't have that right now. Part of it may be, which I'm fine with, because eventually they'll close that gap. Hard to figure when their Chinese partner is going to come along. But then there's the dynamic of, is there this shift where Chinese consumers, if you look what happened to Samsung too, Chinese consumers are just adopting more of their domestic brands? Is it kind of a made in China or Biden China, Chinese root for the home team kind of a dynamic? And so I think that may be playing into it. That's, to me, is more concerning longer term. I don't have an answer to it, but just as I kind of think about China more broadly, that's on my mind. As far as like their other businesses, Mac and iPad were strong. Services, they beat slightly. It was up 14%. The street was basically looking for 13% growth. But, I think with the services piece, it is worth mentioning, this is still 20%-ish of sales. And so it's a big piece. And they're just not seeing any impact to this concern about what's going to happen with take rates in the App Store and adoption. This is just a machine that keeps kind of clipping around and clipping along. And I think kind of the strength in the App Store is evidence that once more AI-powered apps come out, Apple should be able to capitalize or monetize some of their Apple Intelligence through the sale of AI-powered apps in the App Store. So I think that the kind of the continued strength in services and the guidance services was relatively was favorable. Next, just to talk about the guide more specifically, that's when the stock turned positive in after hours, when they got and talked about the guide. And so when you miss a quarter, your immediate reaction is that you're going to guide down the next quarter. And when they gave guidance, I'm going to put it through the translator. Effectively, they guided to, call it 5% revenue growth for the March quarter. Now, the street was at 4.5%. So the fact that it more or less was in line was impressive given the miss that we had in December. Some of that comes from that channel inventory shifting from December into March, but overall, that was kind of a nice surprise. They did talk about this FX headwind. That was like 2.5% impact. So the number would have been more like 7.5% for the growth in the March quarter, if not for FX. But I'm reluctant to give companies credit for that, because when it goes in their favor, we don't hear about it and we don't ding them for it. So we have to kind of keep it consistent, and let's just not give them credit and say that they effectively guided in line, which view that as generally a positive. And lastly, just in terms of tariffs, came up the second to last question on the call, and they said no impact. No conversation right now would be complete without the topic of DeepSeek. And Tony Sacconaghi did ask the question about it, and Cook just basically said, as price comes down, more people use the innovation. Of course, this is been kind of the theme about the AI supporters, present company included. And Cook didn't really elaborate more in terms of what that would mean. But in general, if you lower the cost of inference, that's going to be positive for AI app developers, and also positive for Apple, because they're obviously licensing some of this LLMs. And so just some very basic things that you're doing on iPhone and Mac OS that uses Apple Intelligence, there's going to be some sort of a fee that there'll be, or some sort of a charge that they're going to be having to support. So that eventually they're going to get some of the price breaks that DeepSeek is gaining is probably going to come to them through lower costs from OpenAI and Gemini. So when you put it all together, is that there was some hair on this quarter. I think if you look more closely at it, that the December quarter and the March quarter kind of more or less in line. The opportunity around Apple Intelligence is still intact, even though it's going to probably take longer to get there. And the early indications are that Apple Intelligence is having a positive impact on sales. Too early to say what tariffs are ultimately going to mean, but of course they successfully navigated that in the past, which I suspect will be positive for them in the future. I'm a shareholder, continue to believe in the company and ultimately where they're going, that this is products that really we can't live without. And I think that even though the growth rates aren't as high as other companies, I think the stickiness of the business is something that investors can rest well at night knowing that this business is going to continue to grow and march forward. So on behalf of Pressure Points, bye for now.